As has been told to you, I think MSMEs are a very integral part of our economy. And when we talk of the first wave, the second wave, the lockdowns, I think the segment which has gotten affected the most is also the SME segment. There's been a lot of talk on how do we make sure that they are more viable. And I think this particular conference which we are having on financing India's MSMEs will actually be giving you real life experiences of people in the SME segment, people, banks, financial institutions which are in the business of lending to the MSMEs to actually provide their views out here. Now, just to take you back to what happened last year, I think the Reserve Bank you just check up. Somebody is muting me when I'm talking. Yeah? So just check up on this, please. Yeah. So we had seen that the government of India as well as the RBI were quite active in terms of improving the flow of credit to the MSME segment. And I think the first thing which was announced was the emergency line of credit of 3 lakh crores. And during the course of the year, we saw that there was quite a bit of enthusiasm. But I think we came to November, December, we saw that the number of enterprises which were actually provided this emergency credit line had actually come down. Only around 2 lakh crores of sanctions were made out of 3 lakh crores. Now, I think it's not hard to explain as to why we had this phenomenon, because the emergency line of credit was meant only for those units which were considered to be standard assets as of February end. Because for those which were already under stress, there was a one-time restructuring program on. And for the SMEs which were doing very well, there was an equity plan which was floated by the government. And therefore, at some point of time, I think the government as well as the RBI, they extended this 3 lakh crores of guarantee which was being provided to SME loans, was also extended to 26 other sectors which were identified by the Kamath Committee. Similarly, we also had this LTRO operations. The whole idea was to make sure that there was more credit which was made available to NBFCs, since NBFCs have probably the best contact with the SMEs. And it was felt that the overall flow of credit to the SMEs would increase on this score. So I think that was another very affirmative step which was taken last year. And coming to this year, I think the RBI in their April policy did talk of the SLTROs, where the small finance banks would be given around 10,000 crores, which could be on lent to the SMEs. But quite surprisingly, only 400 crores were subscribed for when the auctions were held. Now, there's a problem out here, because when we talk to lending institutions, including banks, I think most of them are very concerned about the quality of assets. And given the fact that SMEs have been buffeted on all ends, both in terms of supply, in terms of demand, in terms of their receivables, in terms of the creditors, there is a bit of hesitancy which we have seen in terms of banks lending. So we had kind of a guarantee which was given, it seemed to be okay. But otherwise, we talk to the bankers, they'll say that, look, we are a bit cautious. We're not going overboard in terms of lending to SMEs, merely because we are getting funds from the RBI. So this was the experience of some of the small finance banks. And the other issue, of course, if you talk to the SMEs, because we at Care Ratings have been carrying out surveys regularly among the SMEs, I think lots of them feel that, look, I'm not quite sure about when I'll be able to resume my business, especially if you're in the service sector. We have various states having lockdowns. There are lots of inhibitions about what you can do and what you cannot do. So in this kind of a situation, does it really make sense for one to borrow from the banking system and make yourself more indebted? So I think this has been a kind of a fundamental question coming, saying that should I be borrowing money for growth when there are very few growth opportunities there? So lots of things have been done by the government, by the RBI, but finally, at the end of the day, if I'm borrowing money, I have to make sure that I'll be able to deploy it, and I do not just increase my debt burden and lead to a state of saying that I have to go back to the bank and say, please restructure my debt, so on and so on. And the last point is that we had also carried out a survey more recently in the month of April, May, when we had this lockdown. We asked a lot of these SMEs as to, do you have plans to borrow funds? And surprisingly, we had around 40% of the sample actually said that we have no plans to borrow money. Another 40% said yes, and 20% seemed to be undecided. So quite clearly, it's a fairly ambivalent picture when it comes to the financing part. A lot has been done in terms of push being given by the regulatory authorities. And we, of course, need to know what exactly is holding the SMEs back, what is exactly holding the bankers back. And I think today we have probably the best voices in the industry to give their opinion. And I think we'll all go back more enriched with what we hear today. So I would like to first start off. We have around 13, 14 speakers today. So it's going to be more like an IPL match. And I think you'll all been told about what time is there to talk. It's going to be 5 minutes in general. Certain speakers will have 10 minutes. And we would request everybody to stick to this 5-minute mark. So and do the most of that 1 over which you get to bat. And we'll be taking down notes and probably ask certain questions at the end of the program in case we do have the time. So I would first like to invite Mr. Uddhav Podar. He's the co-chairman of ASSOCHAM Council on Ease of Doing Business and also the CMD of the Bhumika Group to make his presentation or his speech. Thank you. Mr. Podar.
Thank you, Mr. Sabnavis. On behalf of ASSOCHAM, I would like to welcome all of you, especially our special guest, Shri Sivasubramaniam Ramanan, CMD SIDBI, Shri Umesh Balani ji, Chairman ASSOCHAM MSME Council, Development Council, Shri Sushil Kumar Saraugi, Co-Chairman ASSOCHAM MSME Development Council, Shri Swaroop Kumar Saha, Executive Director Punjab National Bank, Shri Mahabaleshwar MS, Managing Director and CEO Karnataka Bank, Shri Alok Kedia, Country Head Business Banking IndusInd Bank, Vai Kumari, General Manager SIDBI, Shri Vivek Malhotra, General Manager Direct Credit SIDBI, Dr. Abhishek Agarwal, Chief Regional Officer, ASEAN, Shri Kamlesh Gandhi, Managing Director, MES Financial, Shri Pradeep Gode, Managing Director, C2FO India, Shri Prakash Tankaran, MD and CEO InvoiceSmart, Shri Anil Verma, Director, Moglix, and of course, Mr. Madan Sabnavis, who is the Chief Economist from Care Ratings. I'm very glad to be part of this important initiative, E-Conclave on financing India's MSMEs. We will be discussing the theme of ease of financial access and economic sustainability of MSMEs. The backbone of Indian economy, the MSME sector has contributed significantly to the growth and development of the country. The MSME sector contributes about 30%, 29.7% to India's GDP and accounts for about 49.66% of India's exports and close to 45% of the manufacturing output of the country and employs more than 11 crore people. So these are staggering numbers, I must say. MSME have gained increased attention in India in recent times, considering their strategic importance to the economy and country. In spite of all their contributions, the MSME still faces substantial challenges in India. The prime aim of this conference today is to discuss the ease of financial access and the economic sustainability of the MSMEs and the way forward. We would like to applaud the various measures taken by the government, the Ministry of MSME, which has taken several path-breaking initiatives in MSME sector during the last 1 year. These include putting in place a financial support mechanism through fund of funds, broadening definition of MSMEs, which was long pending, introducing IT-based champions platform to provide solutions to issues of MSMEs, and support to MSMEs through emergency credit line guarantee scheme and many more. The union budget has doubled the allocation to this sector, MSME sector, to 15,700 crores for the current financial year 21-22. The World Bank has also approved $750 million to support credit finance for Indian MSMEs. With the COVID-19 pandemic disrupting economic activities worldwide, the role of financial institutions in supporting businesses in the post-pandemic world will have to go beyond the routine financing. Adoption of innovative lending models will fall the right balance for financial stability and also encourage a focus on credit needs of small businesses in the country. The continued evolution of MSME lending landscape is the way towards achieving the vision of Atmanirbhar Bharat. ASSOCHAM has been effectively creating various platforms to help the industry and government to collaborate and plan the reshaping of the economy. Today's conclave is another such endeavor, which brings together some of the most important names and stakeholders in our session, who will be discussing brainstorming and putting their views out on the key themes, which are policy and growth of MSMEs, credit and finance of MSMEs, impact of the RBI governor's recent announcement in the outlook of COVID-19 pandemic on MSMEs, challenge faced in lending to MSMEs, alternative credit for small businesses, innovations in MSME financing, ecosystems enabling services, trade receivable discounting systems, loan service providers, market-based financing to the MSME sector, and digitizing the lending process for MSMEs. Maybe some more which I have missed out. On this note, I once again welcome our audience and look forward to this crucial discussion and expect some major takeaways to come that will help our policymakers in formulating effective growth strategies. Thank you so much.
Thanks a lot, Mr. Podar. In order to set the context, I would invite Mr. Umesh Balani. He's the Chairman, ASSOCHAM MSME Development Council and MD and CEO of Rotomac Motors and Controls Private Limited. Mr. Balani.
Good afternoon. On behalf of the ASSOCHAM National MSME Development Council, I welcome our special guest, Sri Siva Subramaniam Ramanan, CMD SIDBI, as well as other eminent panel of speakers, media, and our distinguished attendees. I will begin this note with a small personal experience. 27 years ago, after passing out of our premier business school, I approached a public sector bank for my first term loan of 3 lakhs to set up my micro enterprise. The bank, even knowing that my family had been banking with them for several years, were insistent on a collateral security without any relaxation. I had a lot of discussions with them and cited, showed them my business plans and how I would be cash positive in a few years, but still they insisted that collateral security is a must. Fast forward 27 years, my manufacturing company, based on the lean outsourcing model, has reserves of 100 plus crores, net current assets of 150 crores, is rated A- by CARE, and ranked the top MSME manufacturing company in India by ET Rice. My company is almost debt-free, but occasionally needs enhancement of non-fund based limits. The same bank with whom I have been exclusively banking since 27 years, yet again today insists on a small collateral security for again a very small enhancement in non-fund based limits. My personal experience could be representative of the challenges faced by millions of SME companies. Some of them could be just startups, some of them could be mature companies, but they all go through this harrowing experience of finding it very difficult to secure funds for their growth plans. In addition to what the previous speaker, Mr. Podar, has quoted, I will cite just a couple of statistics to build the right backdrop. MSME's share is 29.7% of India's GDP and 49.6% of India's exports, which means that the MSME sector plays a very important role in our economy and our GDP. 14% of the MSMEs are women-led and close to 60% are based in rural areas. Most MSMEs start life as a dream of an entrepreneur or as a mom and pop store. These micro enterprises find it difficult to grow due to lack of external financing, as the entrepreneurs cannot put together either the collateral or the margin money for new investments. Startups which are asset light or service sector find it almost impossible to secure debt financing. A small percentage of startups may attract VCs and other kind of private equity players, but most VCs and PEs are extremely wary of investing at the early stage. Thus, most micro companies find it extremely difficult to graduate to a small or a medium-sized company. This lack of adequate and timely access to finance continues to remain the biggest challenge for the MSME sector and is the prime constraint to its growth. As per an RBI report, the total commercial lending exposure in India stood at USD 919 billion as of June 2020, of which the MSME segment holds only about 25% of the total lending. Moreover, the estimated debt requirement of Indian MSMEs points to a colossal credit gap of over USD 219 billion, outstripping the available supply of finance from the formal sector. In recent years, of course, there have been changes, and the banks and other lending organizations have relaxed their very strict norms. There has been an increase in digital footprint and online transactions even in remote locations of the country, and this has opened up the markets. There has been an emergence of innovative lending platforms due to which smaller enterprises with almost no credit history are now finally getting some kind of formal credit. Fintech companies have played a big role and are changing the dynamics of lending market with the help of new technology, and of course, they've made loan processing simpler for the applicants. Applying for a loan in past meant visit to a chartered accountant, and the CA would prepare the proposal, charge hefty commissions or fees, and somehow manage to get you some loans. This, of course, has been changing over a period of time, and I think in today's session, we will hear from other speakers what are the new opportunities for MSMEs. Does this continued evolution of the MSME lending mechanism can be a very significant step towards achieving India's vision of being Atmanirbhar? Thank you all.
Thanks a lot, Mr. Balani. I think that has been very insightful, especially where you gave your personal experience. I think that is the experience of virtually all the SMEs. And I think when we talk to SMEs also, the normal thing is that, look, if you look at the major mischief which has been done in NPAs, it's always the larger companies which are lined up at the IBC. But we are the guys who have problems when we are borrowing from banks, and it's not the larger companies who do the mischief. Anyway, thanks a lot for your insights. And now I would request Mr. Pradeep Gode, MD of C2FO India, to present his views. Pradeep, yours.
Hi, thanks, Madan. And Mr. Balani, really appreciate sharing your personal story. And this is something that I hear from many small, medium businesses, and it continues to be a challenge. And probably one of the reasons why we've gone down this path of building this business called C2FO in India. Good afternoon, ladies and gentlemen. My name is Pradeep Gode, and I'm the Managing Director of C2FO in India. C2FO is a global financial technology business solving the needs of working capital for businesses across the globe. We've been in operation in India for over 5 years now. Let me add to some of the statistics that the previous speakers have presented. Depending on how you slice and dice the data, I've been told that there are 53 million micro enterprises in India. There are about 2.7 million small enterprises and only 100,000 or 1 lakh medium enterprises in India. So as you will see, only 0.2% of MSMEs are really medium businesses. If you combine small and medium, you reach up to 5% are small and medium businesses. So I hope you can see the challenge in these numbers, right? It is not uncommon for all of us even to club all MSMEs into the same categories of business, talk about broad brushed approaches to finding solutions that may work, that could potentially never work for the entire 100% of the MSMEs, right? The needs of the top 1%, the top 5% are very different from the remaining 95%. So in my humble opinion, actually, I think there's arguments to be made that the two M's in the MSME should not belong together, and the medium and the micro should be segregated or viewed in different contexts. But I'm going to leave that as a topic of discussion, and hopefully a different panelist will address that topic later on. But now coming back to the topic of my presentation, which is around marketplaces. Traditionally, marketplace approaches in financing meant it's an online portal which allows a business to showcase themselves and use the marketplace to identify a financial institution that is willing to support the borrowing needs of that business, right? So that is what I would consider a marketplace. Now, most of you will be aware that the need for a working capital for small or medium business arises because there is a gap in cash flow, gap between the collections for the business and the expenses that they're undertaking, right? The payments that they've made for the expenses. But what if I told you that the top 5% of the MSMEs, right? The top 5%, or maybe about 2.5 million businesses, a lot of them actually serve other businesses as well. And some of these other businesses, customers are large, small, some of them very large global customers and very large Indian customers as well. And these small, medium businesses have very high quality customers. These are solid, long-standing relationships that they've built over time. And potentially they have receivables from these customers as well. So at C2FO, the alternate approach that we have taken is to create a marketplace. But our razor focus as a company, as a marketplace, has been to bring liquidity to those MSMEs that do business with these large, credible customers. A marketplace, by definition, is demand and supply aggregating and coming together on a platform. So Uber is a marketplace where demand for rides converges with service providers or ride providers, right? Amazon is a marketplace that brings sellers of products and consumers of products, and they transact on the platform. Similarly, on C2FO, we've been able to aggregate demand for liquidity across thousands of suppliers that belong to a certain corporate, and then bridge that liquidity need by tapping into the sources that the corporate has available, either through their own balance sheet or their bank's balance sheet. So in this process, what we've really done is really disintermediated the process of bringing liquidity to these small suppliers. Today, our technology platform in India has over 200,000, 2 lakh suppliers in India that seek liquidity through C2FO. And most of that liquidity is actually fulfilled by their own customers. And we are enabling these businessmen to take voluntary decisions around all their financing needs. Just like you and I, many of these businesses, and I speak to many individuals like Mr. Banani, who've built these businesses over the last decades. These families have built these businesses. What are they really looking for? What do they care for? I mean, many of us are looking for real-time information, right? We are looking at learning about our professional networks through LinkedIn. We are looking at convenience in shopping through Big Bazaar, Amazon. We are looking at payment convenience through Google Pay, Paytm. I mean, that is similar to a lot of these characteristics are similar to what MSMEs and businesses are looking for in India as well. They're looking for simplicity in their dealings, simplicity in their financial dealings. They're looking for quick response times. They want flexibility in the way they approach businesses. And ultimately, they want to own their own destiny. And that is what a small businessman, a business family wants in India. And this is exactly what we've been able to create. And I'm proud of the work that we've done here in India. And we've done this in a very, very methodical manner by solving most of the pain points that I just highlighted to all of you. We've created a completely frictionless model with no paperwork to access liquidity. We provide consistent, reliable service, irrespective of the size of the company. We've invested deeply in technology, usability, so that we can create a very seamless experience through the platform for these business users.
Sorry to interrupt you, Pradeep. I request you to kindly wrap up.
Sure. Yeah. So as I wrap up and as I reflect on, I'm going to take just 1 minute, Nahid. Think about the work that we've done and the marketplace that we've created. I think there are 2 or 3 themes that really emerge, which I want to share and hopefully will benefit other fintechs and other businesses as they think about this. My first learning is that small business owners want to be empowered, right? They want to dictate their own terms. They don't want the high street bank or the customer dictating their terms. They want full control. So as you create your business, as you think about a marketplace, how do you weave this sense of empowerment into your offering? I think that's something that's been a great learning for me. The second aspect is business ecosystem is all built on trust, right? And especially in a trust deficit economy like India, this is a critical element to do business. So how does one replicate these trust relationships that exist in real business on a marketplace or in a financial technology offering? So if a company like Unilever or Dabur trusts a small, medium business as a supplier or as a channel partner, why shouldn't the bank trust this business, right? And then finally, what I also learned through my own experience at C2F over the last 5 years is that technology is just an enabler. And it's very, very critical to tie that into a very solid service experience. And any decision, what I've learned again is any decision for a small businessman that relates to finance is a very important decision. And it requires a lot of trust for somebody to engage with you and deal with you, right? So how do you do that as a marketplace? How do you scale that trust building for over 200,000 suppliers? So that's where I think the technology and the data comes in, and you are able to leverage these things to provide that service in a relevant manner and in a timely manner, right? So I'll pause there. Thank you for the opportunity to share my
thanks,
story, and I look
thanks,
forward to
Pradeep. Just one quick question for you. What are the volumes of funds which you have enabled? No? Could we have a sense of that? If I want to say that
our run rate this year is probably $3 billion.
Wow,
over
that's
20,000.
very great. Very encouraging. Thanks. Thanks a lot for that. I would like to now invite Mr. Anil Verma, Director of Moglix, to please present his views. Mr. Anil Verma, please.
Yeah, hi, thank you, Mr. Madan, and thank you, everyone. My sincere appreciation, and good afternoon to everyone. My sincere appreciation to ASSOCHAM for a very time-relevant topic here. Easing finance for MSMEs, I think, has been the core focus. It's been the topic well discussed all around, and there are various dimensions. There are various dimensions to it which are being put forward by various panelists. We've had a small discussions by some of the panelists who have mentioned their personal experiences and how things haven't changed much from seeking collateral 25 years ago to now. Also, there was a discussion on how the credit offtake has been kind of not increasing. In fact, I was reading an article today in Indian Express which said that there is a deleveraging exercise that has been happening in Indian corporates. There was a 1.7 lakh crores of deleverage that has happened. It was an SBI report. Is across multiple sectors, which is astonishing. I think people are increasing. In fact, organizations are increasing their MSME, their cash and reserve balances, probably to tide over difficult times. So these are kind of contradictory views as to while there is enough and more infrastructure being put up to credit enable these MSMEs, organizations are kind of deleveraging themselves. So that also has to be a thought process going forward as to how do we encourage not just the access but the usage of credit. I think that's pretty relevant. So just a small introduction here. So I director in Credlix, and Credlix is a new age supply chain finance tech platform, essentially a part of another B2B aggregation startup which is called Moglix. And Moglix has been into B2B trade aggregation for almost like 6 years now, and has been very close to enabling MSMEs as part of their supply chain activities. Essentially combining a lot of large corporates to a lot of MSMEs. There's been a lot of significant work done by Moglix in the last COVID-19 pandemic era, essentially working on the medical equipment supplies, and all that learning kind of naturally brought on to the topic of enabling finance as a tool-driven activity rather than an activity which is driven by static data. And I think as Pradeep also mentioned, this has been probably one of the challenges for a lot of MSMEs. Back in the time when we used to go with balance sheets. Even in current times, if we go with balance sheets, I think we're still in the stone age. And that's the challenge that which a lot of fintech players are trying to solve. And Credlix is part of that contribution chain here. I have a small presentation which I would like to make through. If I can just share. Okay, is this visible to all?
Yes, please go ahead.
Okay, keeping the sanity. Thank you. Keeping the sanity of time, I think my larger focus has been here is around innovations in MSME financing, which is the piece that I have picked up to discuss. While the whole MSME financing piece is pretty large in terms of the scope and breadth of what we can cover. I think what new age fintech platforms are bringing in are innovations to access and usage. There is enough and more infrastructure support which the government provides. Yourself and other panelists have discussed how the government schemes have been kind of put forth. Of course, a lot of them are tactical in nature, given that what the COVID-19 story brought in terms of momentary stress. But it doesn't look like that the stress seems to be going away, more on a long-term basis for a lot of MSMEs. So a quick overview, I think the numbers have been well stated. We are pretty strong on the strength side. There are 63 million MSMEs working around. Pradeep said most of them, and we all know that most of them are on the micro side. Our contribution story is well known to GDP. Numbers have been stated. However, I think it's a matter of fact statement that we do lag in terms of our contribution to GDP vis-a-vis a lot of emerging economies, which are upwards of 40%. And what lies at the center of it from where we are. So MSMEs as is to future and beyond is essentially what will take us. Is the innovation theme here. And when we say innovation, I'm trying to bring focus here as to how do we bring innovation at scale? How do we create an en masse feature around the whole innovation story? And that's where I've picked up my understanding of innovation from an OECD framework, which essentially talks about 3 pillars of innovation. we should be able to develop, we should be able to deploy, and we should be able to utilize. So utilization would essentially mean economic utilization. And that's where I think the whole theme has been a little lackluster. While there are enough and more credit avenues, the access of those credit opportunities to MSMEs has been lacking. And for that purpose, infrastructure, I think, remains a key enabler. There has been a lot of innovation done in the last 5 years, mostly around the digital side of it. And that's why whatever is expected to take us from 2021 and beyond is digital adoption, which is where two core initiatives that I think our government has rightfully taken, and that required the infrastructure push, was GST and UPI. I think both GST and UPI rails have kind of brought in the whole scale story to the MSME engagement. And there is an article which talks about that payment disruptions usually happen once in decades. So I think we have had our story of disruption there on the payment side, which should probably take us through. Now, how do we utilize that whole trail is something that we have to talk about. Is data the new gold? Are we talking about credit only, or are we also talking about multiple means of financing, while credit remains one of the means? And that's where I think a lot of alternate finance models will have to come forth. I'm sure we have a theme here which talks about market-based financing, which has been kind of available there, but very, very limited for a lot of MSMEs. Do we have platforms coming up for that? I think that's the next stage of innovation that will happen probably. So, of course, challenges are known. Lack of credit and lack of cash flows both are very, very significant challenges. And I'm talking here in terms of usage of credit rather than just the access. While they will fulfill the basic criteria of access, I think what kind of hinders them is how do they use that. Lack of cash flow, of course. Again, payment delays to MSMEs are very well known. Multiple channels have been opened up for enabling that, but a lot of challenges do remain as a core working capital problem to MSMEs. And that's kind of also restricting their whole credit growth story. So where Credlex is coming up is trying to solve all of these challenges put together. We understand that there's a lack of credit story. We understand that the cash flows are challenged. And that is where we bring supply chain finance solutions to embed MSMEs into the whole conduit of generating payments on their own basis. So while I would say that what Pradeep said is one of the options that credit can be arranged by the anchors themselves or the corporates themselves, we're also trying to bring in platforms where external lenders can seamlessly assess based on a proprietary credit score, where we can kind of enable a lot of smaller enterprises just on the basis of their data flows. I mean, nobody needs to bring in a static balance sheet story. There are enough and more plugins provided by the government infrastructure now, whether it is NPA data or GST trails. I think what we need to do is build more dynamic credit scoring models so that there are pre-approved eligibilities for MSMEs rather than they have to run around from A institution to B. And hence, the whole digital adoption story is a challenge. The kinds of solutions that we look at while we are building our institutional infrastructure, we are looking at these three kinds of solutions, which I think on a macro basis are being deployed or should be deployed. Structurally, of course, there has been a lot of encouragement in use of GST, the digital payment rails. Government itself has been encouraging the use of GEM platforms, and we have seen significant adoption by the MSCs who supply to government. Marketplaces, again, as we just spoke about, an Amazon or a Flipkart or an Uber are all marketplaces. We are trying to bring in MSMEs on a platform whereby a data is a self-generated tool to now assess credit. And credit guarantees is more of an infrastructural support which the government gives. Of course, all of this is a function of what we also provide in terms of skill set. In terms of operational activities, what we have seen in the last 3-4 years is, I think most of the technology that has been built is around trades, and OCEN is more about. Hello.
Sorry to interrupt you, Anilji. We are, rushing with the time. Please close it.
Okay, I get that.
Yes, Sunil.
Okay, so I think the whole theme of innovation is around deploying technology in the right way, whether we use a marketplace platform which is enabled by the government like Threads, or we use private platforms which are essentially marketplaces combining MSMEs and customers. The core theme that all of us are trying to run around by using technology is bring lending or bring financing as close to trade as possible. Finance where the trade happens, I think, is the core underlying story in supply chain finance, and that is what we're also trying to provide here. So essentially, that's the Credlex way of making a small difference. Essentially, stay close to the trade, make an assisted journey enabled, build scoring models where you can pre-approve customers, and then since we are going global in terms of our approach, it is also our responsibility to take those MSMEs connected to the global supply chain. And these are some of the initiatives, I think, in all small ways, as we all add up as fintech plays to facilitate, I think the whole pie is only growing bigger. So our belief system is around putting technology to the whole piece of access and usage. Thank you, everyone. And happy.
Yeah, thanks a lot, Mr. Verma. I would now like to invite Mr. Alok Kedia. He's coming from the banking sector, country head, business banking, IndusInd Bank. So let's hear your view, please.
Yeah, good afternoon, good afternoon, Mr. Sabnis. And thank you, ASSOCHAM, for inviting IndusInd Bank, which I represent over here, to share my and also to share our thoughts on the new innovations in MSME financing. Yeah. So so as everybody is aware that, I mean, MSMEs financing is the biggest, let's say, gap that we have in Indian growth story as of now, with almost like $300 billion of MSME financing gap, which we feel that, I mean, obviously there are challenges which everybody is aware of, and I'm just going to talk about how innovations can help bridge some part of that gap. So first and foremost, I would like to discuss is supplier and dealer financing. Collectively, it is called as supply chain financing. As Mr. Umesh Balani also mentioned earlier in his speech, that collateral is the biggest stumbling block in getting the right kind of loan for any MSME. So what this supplier and dealer financing, SCF as we call it, does is basically it gives financing to the MSMEs without requiring any collateral. Okay, and it also comes at a very cheap financing, which is again another problems which our MSMEs face. I mean, as I mentioned, that almost $300 billion of gap which is there, which is currently either unfulfilled or it is let's say fulfilled by unorganized sector, wherein our MSMEs have to shell out something like, let's say, I mean, any kind of obnoxious interest rates. So what this supply chain finance does is give financing to our MSMEs without collateral at a very fine price, and in fact, in many cases, or rather most of the cases, the lending institution does not even look at the strength of the financials. Okay, so what it does basically is that if a supplier or a dealer, we'll talk about supplier first. Supplier is financing to a larger principal. So in supply chain financing, the lending institution basically finances those invoices, okay, for the supplies made to those larger corporates. Because as we know, I mean, most of these MSMEs are actually financing or rather supplying to the larger corporates, and because of their strength dictate the terms, and in the process our MSMEs actually have to have a larger working capital. So this supply chain finance actually takes care of the need of the short-term financing of the suppliers. So that is one big area which can help our MSMEs. While in India, it is, I mean, many of the lending institutions and NBFCs are doing supply chain financing, but it has not yet caught up in the way it has caught up in the Western developed countries. So this is one area where our lending institutions can let's say develop on the models and do a very secured kind of a, let's say, lending to our MSMEs. It's a win-win for both. I mean, both the lenders as well as for the MSMEs. The other area where innovation is taking place, has taken place, is in terms of lenders actually getting into GST-backed loans, basically. So how it happens is, again, one of the reasons why MSMEs are facing this financing problem is because obviously they don't have the credible financials available, and which does not give comfort to the lenders. So how it helps MSME and the banks is that the banks are able to actually access borrowers GST data directly at the GST's website. Okay, that gives the comfort to the lenders, basis which the banks and other NBFCs are able to lend to the MSMEs based on the credible data which is available. So this is one big development which has happened post actually GST implementation. The next is I think of course I mean everything is now digital backed only. So
Alabji, request you to close it in 1 minute.
Okay.
Alabji,
Yeah. So the other innovation which is going to help our MSMEs is the digitization of the entire end-to-end loan giving process from the banks and financial institution side. So how it helps again our MSMEs is that I mean, see, MSMEs are actually based, I mean, at far off locations also where banks are probably not able to reach. So how it helps is that I mean, banks can reach out to our MSMEs much more faster. I mean, because what is happening is that MSMEs can directly log into let's say a lender's website and apply for loans. They can upload the basic documents, and from there, I mean, banks can pick up do the credit assessment based on algo-based credit assessment can be done, and basis which a decision can be taken whether to give loans or not. And of course, even the documentation in the digital world will happen at the digital platform only. So the digitization of the end-to-end loan process is going to help MSMEs greatly.
Okay, thanks, Mr. Kedia. Just a quick question for you. At what rate does the supply chain finance come from? Just an indicative rate, 15%, 16%, 20%, what would it be?
No, so, Mr. Sabnis, actually, it depends on what kind of, let's say, or rather the profile of the corporates or the principal that.
Can you give us some range? Can you give some range as a banker?
So it ranges from 9% to 15%, depending upon the profile of the larger corps.
Okay, thanks a lot.
Madanji, just give me a second. Two speaker, Karnataka speaker, MD and CEOs, and SIDBI chairman has to have a meeting, and therefore we need to invite Karnataka MD first, then SIDBI chairman. Now.
So can I invite Mr. MS Mahabaleshwar, MD and CEO of Karnataka Bank, to make the keynote address? We have 10 minutes for you, sir.
Thank you, Mr. Madan. Good afternoon to all the participants. While appreciating the timely initiative of ASSOCHAM in organizing this e-webinar on MSME, let me assure all the participants, I think at present about 220 plus, of my intention to confine myself to the allotted 10 minutes only. Mr. Madan, I may even sacrifice 1 or 2 minutes, but I will assure you that I will not encroach upon the next speaker's time zone. So having said that, all of you would agree with me that MSMEs are the growth engine of India's economy. If you look at it from the point of view of the vast potential for employment generation, contribution to the GDP of India, as well as contribution to the export sector, I think that will elaborate substantially of this statement. But most important is that this particular MSME is giving equitable growth opportunity across India by utilizing the local resources, especially the men and material. That point has to be noted by all of us. Naturally, banks and other financial institutions, that is both the NBFCs as well as MFIs, they play a pivotal role in furthering the case of economy. If you look at the loan book of any of these banks as well as other financial institutions, you will come to know that about 20 to 40% of their loan book is for the MSMEs. Of course, even during the COVID-fueled stress period also, MSMEs had special packages in terms of moratorium, restructuring, GECL, etc. Hence, as a banker, with this background, let me throw some light on MSME underwriting capabilities of the bank. So in the past, and for few banks even now, manual processing of credit proposal has been the only underwriting model. Manual processing was, as all of you know, it is definitely time consuming, taking more TAT, largely dependent on the appraisal skills of the individual processing officer. More emphasis was definitely given to the financial statements because we were all dependent on either the turnover method, which was generally around 20% of the turnover or the sales, or for any other machinery or investment loan, about 75 to 90% of the bank with around 5 to 25% margin. Like that, the assessment was being done. Repayment obligations with other bank financial institutions are hardly captured. And compliance and risk management aspects continue to be an area of concern for the banks. Adherence to policy and regulatory guidelines was also tedious, and it was basically a security-oriented lending. So in place of this earlier manual process of underwriting, let me just evaluate the digital underwriting process, which many banks have just started. Digital underwriting, as many of the previous speakers have touched upon, it is an end-to-end system-driven process encompassing the credit sourcing, credit appraisal, credit sanction, documentation, dispersal, monitoring, and even recovery process. Of course, with the least possible human intervention or nil human intervention. So in total, it could be either total digital or phygital. So let us examine this process, how it works. Friends, it is basically a data-driven process with the BREs, that is the business rule engine for different MSME models. It makes use of the authentic data available with the various entities, of course, with the knowledge and consent of the intended borrower. For example, KYC authentication through Aadhaar portal, the financial and tax data through GST, income tax returns, corporate website, etc. Credit history through credit business, utility data through electricity bill, etc. So all these things can be achieved by having effective collaboration with the fintech or the service providers. For example, we have Karza for verification of PAN, GST, CIN, etc. Perfios for bank statement analysis, GST, ITR, etc. Jokata for verifying negative lists, UN sanction list, CIBIL for credit bureau of individuals, CRIF for credit score of commercial activities, DMS, NPCI, etc. So you can understand that a more comprehensive and scientific approach is our digital underwriting process, and it takes care of quality concerns of the banks as well. So ability to assess the probability of delinquencies is also there. And of course, it all happens on real-time online assessment mode. In my bank, that is Karnataka Bank, we have already established a digital center of excellence for incubating this type of innovative ideas. Its development, UATs, final rollout, and continuous fine-tuning and upgradation in an agile way of working. We have already started the digital underwriting of home loans, wherein around 75% of my daily sanctions are happening through this digital mode. Similarly, car loans, two-wheeler loans, salary loans, etc., sanctions are already digitalized. And most importantly, since last 6 months, we have also developed our own mode of digital sanction of MSME, that is a digital underwriting for MSMEs, both working capital as well as investment loans. And in this, during a 6 months period, I have already achieved a level of 55% of daily sanctions under the MSME digital underwriting mode. And of course, we have also introduced micro mitra loans for MSMEs for loans up to rupees 10 lakhs, business quick loan for loans up to 50 lakhs, and of course, for above 50 lakhs, we have regular MSME loans. Friends, my only submission to all of you, because you are all providing very effective ecosystem for lending to the MSMEs. If you look at the banking sector as such, in the first decade of current century, banking sector embraced CBS, that is core banking solution. Second decade, we had seen the ADCs, that is the mobile banking, internet banking, etc. So the third decade of the current century, it belongs to digital underwriting, and that is going to be the game changer. In nutshell, digital underwriting is the next big revolution that is happening in banking sector, because it has the scale, the efficiency, the speed, the customer delight, besides taking care of compliance and risk management aspects. So together, let us ensure that it will be an inclusive journey and a rewarding journey to all the stakeholders. Let us rededicate ourselves for the prosperity of MSME. Thank you, Ananda.
Thanks a lot, Mr. Mahabaleshwar. I think you've stuck to your word of less than 10 minutes, 9.5 minutes.
I have sacrificed 3 minutes, I believe.
Thanks a lot, sir.
Thank you. Thank you.
I would like to now invite Mr. Shivasubramaniam Raman, CMD of SIDBI, to make his address. And we haven't forgotten you, Mr. Prakash Shankaran. We'll get you back later on. So since Mr. Mahabaleshwar and Mr. Shivasubramaniam have to leave, so we just brought them in front. Mr. Raman, please. Yeah.
Thank you, Mr. Sabnavis. Thank you to ASSOCHAM for inviting me here. ASSOCHAM has done a great job in continuously reminding policymakers about what are the immediate priorities that face their constituencies. And I'm sure I am really speaking to a lot of small and medium enterprises. Maybe the micro units may not really be represented within the ASSOCHAM community, but I'm sure the message will also go down to them. So let me simply start by listing out certain products and schemes that have come out, which some of you may not be really entirely aware of. And I think it's important that in this current pandemic situation, if you are not aware of certain schemes, kindly immediately latch onto them. So we start with the very fact that the Udyam platform has now been completely revamped. And today you have a very strong validation of the MSME units when they register onto the Udyam platform. My request to all of you is kindly register yourself on Udyam today, because there are several benefits that may be denied to you if you are not registered on the Udyam platform. This is something which has been created by the Ministry of MSME. And of course, SIDBI is closely working with the ministry on how to further make use of this platform. And as spoken by all the preceding speakers, I think if you're not digital by tomorrow, you're probably dead day after. So, you know, this is really where the country is going. And it's amazing how we have a host of fintechs which are able to provide us great solutions. But of course, as business people, as bankers, we probably have to understand where the risks are and then mitigate those risks. So Udyam is the first, ECLGS is the second. So kindly approach your bank and immediately make sure that you get the benefit of ECLGS. These are low interest rate loans. They are top-up loans. They give you another additional 10%, or if you have not used it earlier, another 20% of your existing borrowings. And this is backed by the government's guarantee scheme. So the banks are per se giving out these loans at a very, very reasonable interest rate. So kindly make use of this in the current situation. The Trades platform is another platform. I know it has its sort of teething troubles, but of late we have seen a higher volume on the trades. It is driven by the buyer. So I know the MSMEs may be vendors to large buyers. The trade platform is driven by the buyer, but it's getting better. There are many more financiers which have come onto the trades platform, and SIDBI is working very closely with all the trades platforms to get more and more buyers to bring their MSME vendor invoices onto the trades platform. The kind of discount rates that the trades platform are witnessing are quite amazing. Of course, this is aligned with the credit rating of the large buyers who are doing the reverse factoring and therefore helping the MSMEs get an easy and a quicker payment. Delayed payments is something that we have talked about for a very long time. I'm completely aware the MSMEs are plagued by this particular problem. I think it really requires all of us, the government, SIDBI, in its role as a DFI for the MSMEs, we need to probably look at more avenues of how to, stop this hemorrhaging, because even today there is probably 90 days to 180 days delay in payments, and that's something which is bleeding the MSMEs. So we are definitely trying to get trades to become, one of the answers, but it's certainly not the main answer. The IBC, the IBBI under the IBC has also tried its best to make sure that the MSMEs can file their invoices on the information utility, but that's something which is really for taking other companies to default. And because the threshold has been raised from 1 lakh to 1 crore, a lot of MSMEs have told us that they do not have probably that kind of outstanding with the company, and therefore the route of NCLT is no longer available to them. Let us see whether that 1 crore stays going forward or not. The Atmanirbhar schemes have come out in a very positive way. The MSME clusters are getting created in aerospace defense, in pharma. This is something which SIDBI is closely tracking. We've got schemes which are meant for the MSMEs with very, very competitive interest rates, and therefore kindly get in touch with SIDBI if you are interested in coming into these new sectors, because these are the up and coming sectors. The power sector is focusing a lot on energy efficiency products, and there again SIDBI is working with the Power Ministry for bringing in debt plus equity support for entities that are going to get into this. SIDBI, of course, has its own set of financing. The RBI recently gave 16,000 crores to SIDBI. And let me quickly explain that SIDBI has its own direct finance book, but the large amounts of finance that SIDBI brings into the market is through the refinance route. And SIDBI is particularly trying to do the refinance for portfolios of NBFCs and MFIs. And this is really, of course, if you ask me, the biggest challenge that we face as to how to get into better rating models, how to look at risk mitigation measures such that more and more NBFCs and MFIs can come within the thresholds that SIDBI has maintained for being able to refinance their books. And that's something which will really leverage the existing balance sheets of these smaller lenders. So I think, very clearly SIDBI is looking at pushing money into the smaller lenders. We are working very hard. We're once again using all sorts of digital technology that is available to improve our own risk rating measurements. And we should be able to move. So today, if we are dealing with about 100 NBFCs and MFIs for refinance, we hope to make that 200 fairly soon. So, it's really about making the entire ecosystem move ahead. And we ourselves are doing an end-to-end digitization, and we are therefore going to transplant that digitization to all our refinance partners too. And this is really how we look at trying to increase the assurance levels of any lender in the country today, because at the end of the day, digital tools are available. If the lenders are small, we're creating a digital hub so that the lenders can use those tools on the SIDBI hub, and therefore we intend to push digitization through to a lot more lenders than what it is probably happening today. The equity space, I would be remiss not to talk about that. The SME exchanges somehow probably have not picked up the way they were expected to. I remember when I was in SEBI, we created the institutional trading platform. That again probably has not really seen the traction that was intended. So we need to work on that. And I'm happy for getting suggestions from ASSOCHAM on how to make the equity window work better on the existing platforms, maybe create even new debt equity platforms, because the UK Senate committee has talked about it. SIDBI is tasked to create debt platforms for the smaller debt segments. We're not talking about 100 crores of debt. We're talking about the smaller 10 to 50 crores of debt segment, which probably has not been addressed too well so far. The credit guarantee schemes of SIDBI and the government are, again, they've been around for a very long time. They are extremely popular with the banking system. We've got the NBFCs, also now onto the CGT MSE, which is the credit guarantee scheme. So I'm just sharing this with all of you because the banking system has the ability to use the credit guarantee schemes and therefore reduce their own cost of lending. And I really think it's time that we all as bankers follow what the governor of RBI has been saying about transmission of the interest rate. The lower interest rates have to get transmitted and conveyed to the borrowers. And SIDBI in its own way has done that in our recent health scheme that we came up with. We actually brought down interest rates to levels of 5.5% to 6% for the MSME sector. So, we are attempting to do a lot. The outreach will continue. In fact, the DFS outreach has been huge in the last year or so. The DFS has been pushing the banks to do a lot of digitization. In fact, it's been talked about the end-to-end digitization, where the last mile has now finally been brought about by DFS with digital document execution, where both digital e-stamping and digital signing happens in a single shot. And this is on the NESL information utility platform. So now 15 states have given permission for digital e-stamping, and soon I expect all the states to join in. And that will really make that last mile signature on documents be completely digitized, including the stamp duty. So, there's a lot that government has been doing, but I'm not here as a spokesperson of government, but all I can say is that please let us interact more, let us get more ideas from all of yourselves, and we are more than happy to take this forward. I've been noting some excellent points that have been made by speakers today. I certainly believe that to be able to use authentic data, single source of truth data, that is really a great thing in this country. We've talked about a lot of digitization stacks, and we'll be adding more to that. So let me just stop there, and if there are any questions, I'm happy to take them.
Yeah, thanks a lot, sir. That was really illuminating. Just one question for you. We have this one-time restructuring for SMEs. Now, there's also a new one which the policy has also spoken of. Can you spend a minute just talking about this one-time restructuring scheme and any idea about how much of loans would have gotten restructured over the years?
So I'm not too sure of the numbers, but from whatever I'm reading in the press, the restructuring was not very popular the first time around. And therefore, I think a lot of large banks have been talking about the expected numbers to multiply now. And I think it's actually a very good thing, because if you look at the RBI's monetary policy of 5th May, and the circulars which have come thereafter, it gives bankers a lot of flexibility on how to do this restructuring. And I really feel that the bankers have owed this duty to their borrowers to reach out to them and educate them and tell them how this restructuring is going to work, because there is a lot of power given in the hands of the bankers to do this restructuring in sort of suiting the requirements of the borrowers. So I would expect restructuring to really pick up, because it's backed by the government. It's a sovereign guarantee. So you're talking about 100% sovereign guarantee of the loans being given out under ECLGS, which is part and parcel of the restructuring program. So it's something which banks should be, sort of very, they should find it friendly enough to do. And I expect the volumes to pick up. I mean, the expectation is that this particular scheme should tide over the problems of several of the MSMEs.
Thanks a lot, sir. I would now request Mr. Sushil Kumar Saravgi Co-Chairman, ASSOCHAM MSME Development Council, and MD Core Energy, to give the vote of thanks.
Thank you.
Mr. Solanki.
Yeah, Honorable Chair, Co-Chair, and respective speakers and guests. It was a very informative conclave, and on behalf of ASSOCHAM MSME Council, I thank all the speakers, Shri Pradeep Gode, Shri Anil Kumar, Shri Alok Kedia, Shri Prakash Sankaran, Shri Mahabaleshwar MS, and Shri Subha Subramaniam Raman for sharing their valuable insights. I also thank Shri Kamlesh Gandhi, Srimati Y. Kumari, Shri Abhishek Agarwal, Shri Vivek Malhotra, and Shri Swarup Saha, who are going to speak later in this conclave. My special thanks to Shri Madan Subhanvis and Shri Umesh Balani and Shri Udhav Poddar for beautifully steering this conclave. I would also like to thank our partners and sponsors, TCI, Renew, Bhumika, SIDBI, PNB, IndusInd Bank, Karnataka Bank, InvoiceMart, and Moglix for always supporting us. Thank you so much.
Thank you. Now we will continue with our program. I would like to request Mr. Prakash Shankaran, MD and CEO InvoiceMart, to speak next. And thank you for bearing up with us. We have changed the schedule. So, Mr. Shankaran, it's all yours. 5 minutes, please.
Thank you. So this is Prakash Shankaran. I'm MD and CEO of InvoiceMart. InvoiceMart is a joint venture between Axis Bank and Metal Junction. So I have been listening to the problem statement from all the previous speakers, and probably I'm one of those lucky few who is part of the solution. Small as it may be, but it's an emerging and an upcoming solution for all the problems mentioned for the MSMEs. So broadly, what we look at is the 65 million odd MSMEs, 99% of who are in micro, and with a yawning credit gap of 20 to 25 rupee trillion, and that too at an increasing rate over the next 5 years. So the formation of threads is no accident. It has been there in other countries, and then when it was introduced in India by the Reserve Bank and government, there were some regulatory drivers initially to ensure that the threads platforms themselves took off as an ecosystem. Start with CPSEs and PSUs. The onboarding of them along with all their vendors has been made mandatory. Corporates with a turnover over 500 crores, they have to necessarily onboard on the threads platforms. And for all financiers who are willing to fund on the platform or finance invoices, they actually get priority sector lending benefits. So in that sense, the entire ecosystem has been set up in terms of MSMEs, the corporates themselves, PSUs, and as well as financiers. And if you look at the COVID year, apart from the obvious benefits that were there in terms of Atmanirbhar Bharat, we actually found that the MSME ministry wrote to the top 500 corporates in the country, appealing to them to pay MSMEs in time, and also route a good part of that to the threads platforms itself. So this indicates the interest the government has put behind this program and the amount of participation that's happening all around. The second is that we were supported by SIDBI in the last year, and it was very useful because MSME onboarding was actually made free as part of the Swavalamban fund of SIDBI. So these were two things that really pushed COVID figures for all the platforms, and it's an indication of where this is headed. Some interesting trends, just to give confidence to all members, is more than 24,000 participants are now onboarded across the three threads platforms. And the financing which has happened, which is more in the last few years, it has crossed 35,000 crores. And this is at an increasing pace every month. So this is not a tapering trend, it is an increasing trend as and how more and more participants join. The other interesting thing that I would like to share with you is that apart from the first quarter when COVID struck India last financial year, when supply chains were hit, that is the only quarter where the threads participants saw a slump in volumes. Thereafter, quarter and quarter, despite different waves and lockdowns and locking and unlocking, the volumes have actually been increasing every quarter. So this is a clear indication that, as a product, despite everything that we are hearing on the economy, the volumes are steadily picking up on this. And it is also catering or also pointing towards increased digital adoption. So one thing that is clearly noticeable to us is that while we are ourselves a fintech and, have a lot of digital initiatives, as part of our armory, but what is surprising is that MSMEs, no matter how small, we find that they are also increasingly adopting to digital. That is one. Second is that we are finding buyers and financiers also adopting different kinds of digital adoption. So the way they interact with the platform, then the way they interact with all players is actually improving, and that is really strengthening this ecosystem, which is entirely digital. The fourth trend, which I want to say, is that although the platform itself is very small, and like most fintechs, they have about 80 to 100 employees, we are now catering to MSMEs in over 560 cities. And over 850 of India's largest corporates and PSUs are actually on board only on the InvoiceSmart platform alone. So this is something I want to draw your attention, because some of the problems that we are seeing, that MSMEs need collateral, MSMEs have to do extensive documentation, all that has actually gone with one speed. It is only a question of increasing adoption, and that will alleviate a lot of the problems that we are talking of today for MSMEs. Finally, 2 or 3 pointers towards making this better. One is, of course, adoption by participants. Even today, when we actually get references from buyers for MSMEs and the buyers are willing to participate, a number of MSMEs are not aware altogether of the TRED platform, and considerable amount of our time goes in explaining to the smaller MSMEs. So this is, an irony of sorts, because at one end you are demanding benefits. Benefits are available, but there is a problem of awareness even today. Second is there needs to be more done in terms of quicker onboarding of MSMEs. The TREDS platforms are actually RBI licensed payment operators, and they follow a full KYC like a bank, which means that the new initiatives around BKYC, CKYC, aggregator-led, models, all that has to be adopted, and we have to make it easy, because the number of MSMEs is astoundingly large in the country for a fintech to handle. The other and the last point which I wanted to mention was an increase of liquidity itself by banks. There are over 45 banks already on the TREDS platforms are supporting us and increasing limits day by day. The move to include NBFCs is going to be a welcome move, because this will mean that more and more of the unorganized sector will come in. And apart from that, there will be an increase in liquidity itself and catering to the lower end rated corporates in the system. So that's briefly what I have, Mr. Madan. I hope I have kept within my time.
Thanks a lot, Mr. Shankaran. That was also really good and insightful. Can I now request Mr. Kamlesh Gandhi, Managing Director, Mass Financials, to make his presentation? I would again say 5 minutes, please. You need to unmute yourself, sir.
Hello.
Yeah, it's fine. Please go ahead.
It's fine. Right. Okay. So good evening, everybody. And I trust every one of you are in good health. I represent Mass Financial Services Limited, and we are serving MSME sector since last 25 years as lenders. And I would like to share my views as practitioner while we had a good exchange of ideas and sharing of ideas by all the eminent speakers before. On the data front, as we know that we have sufficient data available with us, but let me share my views that still we have just cracked the surface. And that is just because of the informality that exists in this sector, and more than 90% of them being the micro entrepreneurs. So this is a task to be worked upon on getting the right sort of data on the real requirement of MSMEs and all the related data pertaining to that. But we have no doubt that MSME plays a very important role in the economic development of the country, and hence requires utmost attention. If I start with an optimistic note, that over the years, the penetration of formal credit to this sector has increased. through various means ranging from in the form of commercial borrowers or individual loans as business loans or for commercial vehicles or through MFIs, where it is presumed that 25% of them are MSMEs. And if we aggregate all this, around 34 to 36 million MSMEs have got access to the formal credit. That is very encouraging. And at the same time, the commercial credit exposure on balance sheet has grown at the rate of 8 to 10% in last 5 years. So this is due to the efforts of various efforts of the government schemes and especially the NBFCs and later on the role played by the fintechs on the extending credit on basis of the cash flow of the MSMEs. Why, as a practitioner, if I share with you, I would like to tell that lack of credit is not the only problem with MSME sustainability and scalability. There are few other things which has to be focused upon, and few of the low-hanging enablers which comes to my mind are, number first is the financial literacy of the MSMEs. That is an area which it is a task we worked upon, can be worked out, but it is very important that the MSME entrepreneurs who have wonderful knowledge about their working needs adequate knowledge on their financing also. That will improve their financial conduct, and rather than just demanding credit, they will be in a position to command credit by virtue of their financial conduct. And having worked with this sector since long, I would always aspire that MSME don't only demand, but they command credit by virtue of their financial conduct. And once they show that they are a worthy asset on the lender's balance sheet, they will not only command credit, but they will command credit at their terms. So very concentrated efforts are required for the financial literacy of the MSME borrowers. And I think that it will go a long way in helping MSME raise the much required credit from the market. Second very important thing which we can do with the help of the technology is market linkages, and that will benefit the small entrepreneurs the most. The use of technology and market linkages will link them to the market, to all the markets far and wide, improve their yields, improve their profitability, and thus ensure scalability. And last but very important is the enabling regulatory framework. You know that MSMEs work as a lean organization. When we talk about ease of doing the business, that applies to them the most, because as an entrepreneur, if they can spend more time on some productive and efficient work rather than just various compliances, I don't mean to say that compliances are not required, but enabling regulatory framework will definitely will be a boon for them in terms of increasing their productivity. And I personally think that these are the things which we can implement and do it immediately in order to enhance their scalability and sustainability. And you can't conclude without throwing light on the current scenario. We are passing to an unprecedented time, and very rightly, the steps very rightly taken by the government on forbearance and liquidity in terms of restructuring and extending liquidity to this sector. I think everything at the disposal of the stakeholders should be done to see to that this MSME gets an helping hand. And having known these entrepreneurs for a very long time, I'm sure that with adequate support, they will not only survive, but become and emerge more stronger as the things come back to now. So these are my views, having served this industry for more than 25 years. And I think that this industry, this MSME industry will continue to play a very important role going forward.
Thanks a lot, Kamlesh. I think everybody will fully agree with what you have said, that MSMEs will continue to play a very important role, not just given those economic shares which we say in exports, industry, GDP, and so on and so forth, but also from a point of view of employment. Thanks a lot, sir. Now I would like to request Mrs. Y. Kumari, General Manager, Institutional Finance, SIDBI, to present her views. Ma'am, could you please come on?
Thank you, SHM, for inviting me. I will cover the issues which bankers face.
Mr. Malhotra, I think there's a slight confusion. It's Mrs. Y. Kumari who should be speaking first.
Pardon me?
No, Mrs. Kumari will be speaking first. You will come a little later.
Okay.
I hope it's all right, yeah?
Yeah.
Okay.
Yeah. So thanks,
Please.
Mr. Madan. Yeah, and my greetings to all the senior dignitaries and the panelists to here. So there's been a larger discussion on the subject, but as a representative of SIDBI, I thought I'll take this short time to give a very quick flavor of how we are approaching the problem of easing out access of finance to MSMEs. I mean, it's been a topic of long engagement for us, considering that our mandate is nothing but MSME. And then the strategies have been something like, which dealt directly with MSME lending. And the strategies have also been, something like dealing with the institutional lenders who are working in the MSME space. So coming to the second strategy, in today's context, the way we look at the whole theme is that we can probably converge our engagement with financial intermediary like NBFC with the theme of digital lending, which is perhaps because we know the future of tomorrow is all in digital space. So when I say this, I would like to make a mention that our engagement with NBFCs has been very long. Chairman had also mentioned it. In the last 5 years, we have probably delivered about 30,000 crore to the sector for onward lending to the MSME clients. And a more particular point is that in the very pandemic year, we had connected with about 60 plus of those NBFCs, most of them being in the single A or triple B rating kind of a category. And we have delivered about 4,000 crore of special credit line, a liquidity credit line to these lenders. So the message is basically that dealing with the sector at that point of time gave us a lot of insights and a lot of confidence that we can take this move forward. I mean, we can take our financing connection with the NBFC lenders a little forward. And so today we have RBI giving us further lines of credit, and we would continue to engage with the sector. And when I said we try to converge NBFCs with digital, there is one specific initiative which we had taken a few years back. A small step, but I would like to make a special mention because sometimes these small steps give us very effective outcomes. I'm now talking about fintech lenders. I mean, it is not the larger fintech universe that I'm referring to, but the very small, community of digital lenders. 3 years back, when this community was basically, finding their feet in the MSME space, MSME lending space, that was a situation where capital was flowing. There was a lot of investor interest. However, the balance sheets and the P&Ls continued to be thin. And they were in no way to qualify themselves for a traditional banking eligibility criteria so that they could raise debt. But that debt was critical for them to scale up. So this was a situation where we thought, let us not look at any of the traditional parameters, dig down to the extent that we could, and start lending by way of traditional debt to these fintech lending players. So over a period of 1 to 1.5 years, as the lenders themselves have acknowledged, the outcome of the whole initiative has been that we've been able to onboard some more commercial bank lenders into their balance sheets. So this is, I wouldn't say we are taking too much credit for it, but then as the lenders would say it, so this is a change, a difference which has been made to their balance sheets. So I think we will continue to do this. Our engagement with the digital lenders would continue to be there in a much larger way. Rather, I think we would also get into working in a partnership mode with them while adopting, acknowledging their technologies, as well as letting them leverage our balance sheet size and our low cost funds. So while that is on the digital side of it, I think there is one other segment within the NBFC universe, as Chairman had pointed out. These are the smaller lenders, today perhaps unrated or probably carrying a lower rating, but no doubt the go-to lenders for the neighborhood small businesses. Now, this is one area where we are trying to understand how we could move away from the regular debt kind of a funding and look at perhaps something more innovative in terms of lending models. So that's the overall perspective as far as the way we are trying to deal with the whole issue of easing out financial access to MSMEs. Thanks a lot.
Thanks a lot, ma'am.
Thank you, Madanji. Madanji, just nice decide. After now, we need to request Vivek Malhotra ji to speak. Okay, please invite him.
Okay, Mr. Vivek
So
Malhotra.
thank you and my apologies for coming in. I had to leave early for the meeting. I had to leave sharply at 4:30, so my apologies. I think there are 3 or 4 issues which we as the bankers used to face, or we still face when we lend to MSME. So I will cover those issues there, but I'll also tell the audience that in the last 2-3 years, what has transpired, that these 3 or 4 issues are no longer there, and how bankers can make use of it, and how the audience can also be a little bit more vigilant. I think the first issue used to be of information asymmetry. We always were bothered that whether the balance sheet which is presented to me is the actual balance sheet, or as they used to say that there is one balance sheet for the banker and one balance sheet for the taxman and third balance sheet for somebody else. So that used to be quite common, but that issue has been addressed. We have today a lot of tools through which we can verify the balance sheets, quickly go to the MCA site or quickly go to the income tax site and check the balance sheets. Then very often what happens is that we are not sure whether the company is paying GST returns on time, or the income tax returns which used to be earlier used to be presented to us in paper, they are true or not. So we can very easily go to the GST website and check the veracity in a jiffy. And there are many fintechs which have integrated their systems, or the banks have integrated their systems with these fintechs, and it takes just a click of the button for the information to flow in the internal appraisal softwares of the company. And this also cuts down the cost. This also cuts down the issues on account of frauds due to fake balance sheets, which ultimately push up the credit cost for the entire set of the borrowers, because banks have to make higher provisions on these NPAs and these frauds. That's point number 1. And point number 2 is again that every MSME borrower is not strong, or every MSME borrower is not fully bankable, and bankers genuinely continue to have their reservations about the bankability of some of the borrowers. Some of the borrowers may need hand-holding for the longer period of time. So for that, what SIDBI and what Government of India has done, that a lot of guarantee operations are there. So there are 2 guarantee companies or 2 guarantee operations in the economy. One is NCGTC, National Credit Guarantee Trustee Company, and the second is CGTMSE, with which people are a little more familiar. So if people have some issue with, if bankers have some issue with, the bankability, and they feel that only in the long run it become bankable. So I think that instrument is also there. So that's one more problem solved. Then again, we always used to feel that giving the larger loans is much better, because within the same time I can sort of give bigger loans. That issue is also addressed, that earlier it was felt that giving loans to MSMEs is time consuming, and it is not, it is non-remunerative, because with the same time you can give a much higher amount of loan. But now you have so many digital tools, and many people said that, one of the bank MDs on the big bank MD said that they are in a position to do a digital journey in so many % of their cases. There are so many tools and there are so many websites which are available where we can quickly give analytics-based MSME loans. So it's not going to take much time, and the old days of collating the information from the borrower and then filling out a form and then putting it up to your superiors for approval is gone. And if you had some queries, then it would come back to you. So now you need to tell the borrower to fill up the application form on your web portal or on your website. Then your credit officer can pull out the information from various sources, whether it is GST or whether it is MCA, or it is income tax, or it is a credit bureau, or it is an analytics company, or it is a payments record company, and populate the relevant fields. And the basis that a model can run, which can very quickly give us the output, and that can again digitally flow to the superiors or the sanctioning authority. So that's point number 3, which has been addressed. Point number 4, earlier, you give loan and they supply goods in the market, and those, the money never comes back, or the money comes back after 180 days. So even though the business is viable, but it's short of liquidity, it's not having the money, it's illiquid, so it becomes an NPA. I think many of my previous speakers have mentioned institutions like TREDS, which was actually proposed by SIDBI to Reserve Bank of India, which was ultimately 3 companies are operating as a platform. Then we have so much, supply chain financing, we have dealer financing, we have invoices being loaded onto information utilities. So, the point which I'm trying to drive is that with technological advancements and so many stacks coming up in the economy, it's much easier for bankers to lend to MSMEs, and they can much more confidently lend these advances and then monitor these advances. These are the thoughts which I wanted to share with us.
Thanks a lot, Mr. Malhotra. We'll now invite Dr. Abhishek Agarwal, who's been waiting very patiently. We'll probably give you an extra minute to speak. Dr. Abhishek Agarwal is the Chief Regional Officer of Axion. Abhishek, all yours.
Thank you very much, Madan. Really appreciate it. Delighted to be here. As Axion, we invest into financial services companies and have been investing for last 60 odd years, largely in the Latin American and African market. In Indian market, we have been for last 10 years. And our role has been very specific in terms of investing into the financial services companies who are targeting to the MSMEs, micro and small enterprises, how the access to capital can really be provided through these financial institutions. And we have more than 20 investments in India. It has been fascinating to hear the conversations in this forum from both sides, from the supply side as well as from the demand side. Suppliers such as lenders and my friends, a number of them I know personally, have been saying we have a lot of credit available, but the paperwork is not in order, or I'm not able to rely on the information, or I'm missing this thing. At the same time, I think the issue from the demand side is that we all are deprived of credit. We all know the MSMEs are the thrust of the economy. And I'm not going to go into the numbers. I think we all have discussed about it. But what is really lacking here is, I feel when we test on a borrower's level, is the intent and willingness. I think the same principle applies on us as well as a banker, intent and willingness. We all can continue to circle around from an policy, from an advocacy, or from others. I think today, the way we see it from a global perspective, the MSMEs have really been pushed backwards because of the pandemic. We are looking at a crisis which is looming over heads. And in order to revive the economy, there is this trust which we need to put on the MSMEs, provide the credit. Now, fortunately, unfortunately, the economic stimuluses were issued long time back. It took a long time, and we need not to get into those what, why, when, how. But I think it took a long time for the MSMEs even to get any small amount of drop from the ocean on that funding. Why has that happened? Now, similarly, I think now these lockdowns will continue to be there. This is an all new normal. Somebody asked this question, how the MSMEs can continue to survive. Is it about the agility? I think I agree over there. But the second important point is that the access to capital is very, very important. And unless we as a banker, we as a lender are out there, and I'm not asking you to put your neck out and then start having the NPAs. But when there are the facilities, when there are the mechanisms being given there, why can't we start lending to the institutions? We know that, I think somebody already talked about that the 95% of the micro merchants, I think, and Mr. Balani already mentioned in his personal example when he started with a 3 lakh rupees loan. Nobody was willing to back him up with a 3 lakh rupees loan, and it was all about the collateral which he was being asked. And the same trend continues to be even today. I am very, very proud to say, from an Axion perspective, I think we have supported the financial institutions across the globe. Today, some of them are more than $2 billion, $3 billion assets under management, largely doing unsecured lending. And which is where, as you work with the entrepreneurs like Mr. Balani, as he said, his requirement was 3 lakh rupees back in that time. And today his requirement must be in millions of dollars. given how the group has become large. So it is really on the lenders, on the financial institutions, where we need to start understanding these MSMEs, micro merchants, start supporting them from the early days, from the very beginning days, where a 3 lakh rupee loan, again going back to that example, a 3 lakh rupee loan would have not only helped the financial institution to get a loan on their books, but also grow a multi-million-dollar book with a company like Mr. Balani. Unfortunately, we don't see that happening. And I think, which is where a major thrust is required from all of us, given there are guarantee schemes available, given there is the support, stimulus package, we need to go out there and support it. Second angle, I would also like to take it from the perspective of the MSMEs. I think it is also very important that we continue to be more and more frugal. We know that the COVID has hit all of us very, very hard. And as in our estimate, we see from the Axion's perspective, I think close to 35% of the MSMEs might even get shut down. And if that is the case, which is why we feel we were pushing a lot with the government, that there has to be a guarantee mechanism so that the financial institutions are not facing a challenge as they give the loans to either some of these or the other ones agencies. But I think given if these are the challenges on our business models, we need to have the agility to come around on our business models and see how we can continue to stay relevant into it. And what I mean to say also this, and I think some of the other speakers also mentioned about it, is to show the agility through by way of our ways and means and conduct on our business, which means getting more and more digital. Now how does
Sorry, Abhishek, can I interrupt you another minute? Can you finish, please?
Yes, sure. I think absolutely. No, so I think what is important is also getting more and more digital so that you can not only sustain your businesses, as all of us have seen in this lockdown, to sustain our businesses, but also give the visibility and the footprints of our data to the lenders and the financial institutions so that they will have more and more comfort on lending to you, because that data will give them a larger visibility. So I think with that, I will sum it up that there is a need on both ends, on the financial institutions end, as well as towards the MSMEs to start building the visibility towards their data so that the lenders have comfort. Thank you very much, Manoj.
Thanks a lot, Dr. Agarwal. Now, I think we're going to come to a very interesting session, keynote address by Mr. Swaroop Kumar Saha, the ED of PNB. But just before I invite him to talk, I have a interesting statistic from as an economist when I speak and I look at RBI data. See, everybody out here in this conference have all spoken about we want to lend to the SMEs, and there are lots of facilities which are there, so on and so forth. There are interesting platforms which are there even outside the banking system. But when I look at the RBI data and I look at what happened in 2021, I think an interesting thing is I see a sharp fall in credit to micro and small. And as what was pointed out by some of the earlier speakers, it's the medium enterprises which are a very small proportion of overall MSMEs, which have actually seen growth in credit. But why is it that even after RBI is doing so many things, you have so many schemes which are there, why is it that we still see that this credit is not growing? Is it a demand side or is it more a banker's issue? Mr. Saha, it's all yours.
Good evening, and thank you, Mr. Sabnavis, for giving me this opportunity. And good evening to all of you. I know this is a very, very, very interesting session that we are having, and the topic also of credit and financing to MSMEs. We all know the importance of MSMEs is a backbone of the economy with more than 6 crore enterprises. It has a large capacity of employment generation, and 30%, it contributes about 30% to the GDP. And of course, and there's a lot of credit opportunities also in our country. The global studies also show that the percentage of credit to the GDP is low in our country compared to the other countries, developed countries. So we have a lot of opportunity on the credit to GDP ratio to improve that, and particularly in the sectoral area of MSMEs. But coming to the main topic today of MSME lending, it's quite a lot of discussions happen on this issue of lending to MSMEs, because it's still in an informal stage. It still has a disproportionate share in the overall credit portfolio. But in spite of that, in this situation, the latest data reveals that the MSME growth to the MSMEs sector lending by the scheduled commercial banks have increased by 8.9% in December 20, and the total quantum that is involved in this is about 16 lakh crore. So there is a lot of things happening, but there are a lot of things that can be done more. Of course, over the last period of 2 years, or one year and a half, we have seen that, particularly in the last 1 year or so, the COVID situation, the economic slowdown was already happening for the last 2-3 years. So there was a concern for this sector as a whole. In spite of that, the government and the Reserve Bank of India, post-COVID situation, has come out with a lot of measures so that the economy, this important sector of the economy does not fall flat, and the RBI relief measures, or whether it is restructuring, whether it is at the restructuring at the first level, and now the recent announcements by Reserve Bank of India last month also. It's a continuous process which the Reserve Bank of India has maintained its stance for helping the banks to have sufficient liquidity to finance this sector. The Government of India also, on its part, has announced various measures, particularly the basic scheme of the most important scheme, of course, was the GECL scheme, or the Credit Guarantee Scheme, which is popularly known, where it guarantees 100%, and there is a 3 lakh crore cover for the entire industry. Overall, so far, as per statistics latest available, nearly 2.5 lakh crore has been disbursed under this scheme, and 92 lakh enterprises have been benefited. However, if we look into the economic context that is in which we are discussing today, the RBI monetary policy of late has shown data or point of a contraction of over 7.5% last year in the GDP growth, and in the current year, the projected GDP growth has been revised downwards to 9.5%. So these are the trying times for all of us. The MSMEs have been badly impacted. Their cost structure has gone has not been okay over the situation for previously due to the economic slowdown, and then did the COVID situation. So it has aggravated the situation to a large extent. However, as bankers, we have made efforts to implement all those relief measures that the Reserve Bank of India has announced, and the Government of India also. So from the Reserve Bank of India, the latest announcements wherein they have also created a 50,000 crore liquidity window for creating health infrastructure in the country, in which all the banks are now in the process of giving structured schemes for generating, creating, I like to say, put it in that way, for creating health infrastructure, particularly the oxygen plants and related categories. For this matter, a lot of discussions had happened amongst the bankers, how to make it simple. And I'm glad to tell you that you must be reading in the newspaper every day that most of the banks have announced these such schemes up to 2 crores for creating oxygen plants in various hospitals and nursing homes, which is again guaranteed by the Government of India. And this will really help the MSME sector also to a large extent, and also create the health infrastructure in the country. As far as the relief measures are concerned, the Reserve Bank of India announced various restructuring schemes for the MSMEs, and of late they have also announced in 2 parts the restructuring schemes for MSMEs and also for the individual and the small business. And over a period of time, since last year, various operative guidelines have been issued, with the schemes have been enlarged, the scope has been enlarged. Today, the restructuring scope has been enlarged to 50 crores. The upper cap of 500 crores have been lifted, subject to a maximum of 40% of outstanding, and maximum of 200 crore. So various methods, various policies are being implemented. And in this very, very challenging times, all the banks are also trying to help out the MSMEs. The credit demand as such is not there overall. We are moving at a 4 to 6% credit growth in the overall scenario of the country. So as such, the MSME growth has also been impacted to that extent. And the restructuring schemes that have also been in our bank itself, we found that though we tried to push the restructuring schemes, many of the better known MSMEs were not really willing to come forward in the first phase, in fact, and they wanted to preserve and understand the situation. Maybe they didn't want to increase their liability, though the scheme was very, we wanted to push it in a big way. But they were also trying to understand the situation, whether the extra liability that will be created, the extra cost that is, whether it will come as a burden to them. So they were observing on that part. So the takers were a bit less compared to what we were expected to have. In the current situation, wherein the scope has been enlarged, all the banks together this time have decided, at least in the lower segment, in the micro and the small segment, to go in a structured manner, uniform manner, particularly the public sector banks, so that for the MSME customer, life becomes a bit easy to get the restructuring done through their banks, respective banks. So there has been an effort post the declaration of announcement by the Reserve Bank of India. All the individual banks so far have drafted policies for helping out restructuring and helping out creating a COVID loan book under the TLTRO window of 50,000 crores and a uniform structure. So suppose I talk about the oxygen plant scheme, it has a uniform rate of interest of 7.5%. So all the public sector banks will be uniform in that respect. In terms of the restructuring part also, we have analyzed that most of the restructuring that is required to be done, or to say most of the stress is mostly in the below 10 lakh category. So in 80%, 75 to 80%, depending on the size of the bank, appearing in the lower below 10 lakh category. So we have tried to implement a structured uniform approach amongst the banks in this segment also, so that I give you an example. We have pushed bulk SMSs, and all these SMSs have gone to the registered mobile numbers in which the customer has registered with us, and based on that, and we have put a very simplified format so that the approach to the more and more outreach we can make to the MSME customers. So we have categorized in 3 categories. We have said so far up to 10 lakhs we'll approach it in one way. 10 lakhs to 10 crores we'll be approaching in a bit more higher version of due diligence, because ultimately the viability of the company or the firm or the MSME unit needs to be studied as per the RBI guidelines. So we have categorized in 3 categories: below 10 lakhs, which will be very simple; 10 lakhs to 10 crores, which is a bit of a higher level of due diligence, and another above 10 crores, wherein we have viability studies and all will be looked into. So we are trying to implement the schemes of the Government of India and the Reserve Bank of India in a much more structured manner, so that the customers, the SME borrowers, can come back to the bank branch and avail these facilities to a larger extent compared to what we had experienced in the previous year. Now that the RBI has also increased it to 50 crores, so the aggregate exposure has been increased to 50 crores. So we feel that with all these steps taken, I think we will be able to push our schemes and all the banks together to help out the MSME segment. So I wish, and through this medium, I request all of you to send the message across all the MSME borrowers or the various associations that are associated with it, so that we have a lot of we can have a lot of traction on this. As far as PNB is concerned, on apart from this giving relief to the MSME borrowers in this situation, we have also structured schemes for the MSME segments. We have GST based on the GST returns, which is very simple. We have also under the restructuring scheme of Reserve Bank of India, there is a liberalized working capital assessment also, when the benefit of a margin is also given to the customers. The rate of interest are also have been made very competitive. Most of the banks like us also, including PNB, has now gone into the cluster-based approach. We have revised our structure so that specialized people can handle this sort of borrowers on the lower segment up to 10 crores. So we have specialized units for them. We have area-specific schemes. We have tie-ups with commercial vehicles, and also we are also promoting the TREDS platform in a big way. Again, as far as structure is concerned, we have also gone into better digital modes of underwriting, and through our innovative designs, so that the underwriting becomes uniform across the bank, so it doesn't leave it to the subjectivity of the concerned authority who is sanctioning the loans. So up to 25 crores of loans today, it is all done through the system in our bank. So I'm very sure that all these will help the growth of the MSME segment. Once this unlocking happens, once we have some traction in the economic activity, I'm very sure we will be able to support the MSME segment in a big way. All the SLBCs also through the various states are also working in a big way. So I leave it here, and I thank you for giving me the opportunity. I am very sure that in times to come, bankers will be able to help out our MSME segments in a big way. Thank you.
Yeah, thanks a lot, Mr. Saha. As we come towards the end, we also have a presentation after the concluding remarks are made by Mr. Sushil Saravgi. Mr. Saravgi, can you please make the concluding remarks, and then we'll have a presentation from Mr. Neeraj Arora.
Thank you so much. Respected chairs, co-chairs, speakers, and eminent guests, I would like to wrap my concluding remarks very short. We at Core Energy India Private Limited, a 9-year-old MSME in solar energy sector, has been supplier to many MSMEs, large corporates, government, and other PSUs. We ourselves have been benefited from various government financing schemes like CGTSME, invoice discounting, emergency credit line, and other things. And would like to inform that some of our invoice got 100% discounting at a rate of as low as 6.9%. So it's only, if MSMEs know all these facilities being available, they can definitely make a best use of it. And speaking to a lot of other MSME in various forums, we still feel that there is a lack of knowledge about various government schemes available in different MSMEs. So there is a need to use this Udyam platform very effectively so that all the schemes and various rights of MSMEs, they should reach to them, and they should know basically where and how to approach right institutions for getting those facilities. Thank you so much.
Thanks a lot. Now we just have a presentation which is coming. It's a presentation, ASSOCHAM GEM presentation. Mr. Neeraj Arora, who's a Senior Director and Head, ASSOCHAM GEM Green Building Council, will have a presentation. Could you please go ahead and make the presentation? I think we have limited time, so you can just do it fast.
Yes. So thank you so much, Shri Madan Sabnavis ji and Shri Uday Podar ji, Chairman, ASSOCHAM MSME Development Council, for giving us this opportunity to present our part on this wonderful forum. So I was listening to all the eminent speakers since last 1.5 hours. So it was a really wonderful discussion we are having. So because at this forum, we have bankers, we have financial institutions, we have MSMEs and all related sectors. So I thought that I should present a very interesting information with you all, that ASSOCHAM has a GEM Green Building Certification Program under which we study and certify the buildings as green rated, whether it is hotel, hospital, commercial building, residential building, or MSMEs. So I have prepared just 4 or 5 slides and will take just 5 minutes to go through that, and would like to, I'm actually looking for the opportunity where banking sectors, banks, ASSOCHAM and the MSMEs can jointly work together to create these sustainable MSMEs, and where banks can help them in the subsidized or concessional, loan kind of. So please allow me a minute. Yeah. So hopefully my screen is visible.
Yeah, please go ahead. We can see.
Yeah, yeah. So so this is basically the ASSOCHAM's JAM Green Building Certification Program, and it is applicable to all new and existing buildings, and it covers all MSMEs as well. So friends, I'll immediately come to green financing thing. I mean, the SIDBI team is there and PNB is also there. So all green building projects, just a minute, sorry, the slide is changing. Yeah. So all green building certified projects in the MSME sectors are eligible, for the financial assistance at concessional rates from SIDBI. So I was just wondering that if similar kind of financial assistance is available from SIDBI and from PNB as well for the MSMEs, those who wish to go for green building certification or wish to go for some kind of sustainability certification, energy auditing kind of. And also similarly in the affordable housing sector, refinancing at competitive interest rate as part of Sunref scheme, for designated PLIs is available. The loans from these PLIs is meant for buyers and project developers for residential projects. So I was wondering if similar kind of scheme is available for our MSMEs also, where they can get the concessional loans from the organizations, financial institutions, if they go for similar kind of certification. Friends, as only 5% of buildings are green in the country, so it's a huge market opportunity for all of us, and it just needs a push and proper framework. So friends, several central governments and state governments are giving incentives in terms of FAR or concessional rates, but still it is not feasible to grow unless MSMEs and financial sectors join hand in hand to make it a movement. ESG sector has a key role in it, and with all the stakeholders. So just a minute. So I mean, at ASSOCHAM we are looking the scope of green financing. So financing green buildings with discounted interest rate, what we are looking for, green insurance policies, green stocks and equities that would make the public more aware of the sector, joint collaborative efforts between housing councils, banking and financial sectors, green rating agencies such as ASSOCHAM JAM, and customize user-friendly policies. And friends, ASSOCHAM JAM Green Building Certification Program can support in customizing and implementing it. The UN SDG related foreign investment funds can also be channelized effectively as well with the enhancement of sustainability protocols. So this is the area where ASSOCHAM is looking for the support from financial institutions and MSMEs, so that jointly we can work out and we can help MSMEs to grow in a sustainable, energy efficient and sustainable way. So SIDBI has this kind of policy, other financial institutions also have. So I mean, I think the need is to make awareness among the industries, MSMEs about this. So friends, at ASSOCHAM, we offer these services: water audit, waste audit, energy audit, net zero, carbon neutrality, sustainability reporting, and training on sustainability. So the MSMEs available on this forum can take this opportunity, take these services from ASSOCHAM we are offering. This is the green building certification of ASSOCHAM, under which we study and certify the buildings as green rated. So the MSMEs available present here, they can take the benefit on this forum. So the MSMEs can approach ASSOCHAM for a similar kind of services. And friends, these are some details of the ASSOCHAM JAM Green Building Certification Program. I'll not go much in the detail and would like to skip these slides because time is very less. And so this JAM Green Building Certification Program is based upon ECBC guidelines and NBC guidelines. So the MSMEs going for green building certification from ASSOCHAM will be fulfilling the Bureau of Energy Efficiency, Energy Conservation Building Codes requirements also. So if the buildings are GEM certified, they will automatically be certified. Also be fulfilling the requirements of ECBC 2017. GEM certification program also follows the United Nations Sustainability Development Goals also. So the MSMEs going for GEM, are fulfilling the UN SDGs also. These are some benefits of MSMEs going for green building certification. So the fresh air demand reduces by 20 to 30%, proper waste management, carbon footprint reduction, carbon neutrality, capacity building of staff members, energy optimization, say up to 20%, and comparison with international standards. So these are some benefits, of going green. And on the other hand, we look forward to the banks and financial institutions to give the concessional loan on concessional interest rate loans to the MSMEs if they go for a green building certification. So on this forum, we would like to hear from the bankers available. And I'm just completing my presentation, stopping my presentation at this point. Thank you so much. Thank you.
Madanji, you are on mute. You unmute yourself, please.
Yeah, thanks. Yeah, thanks a lot, Neeraj. And I think with this, we come to the end of this E-Conclave. I think we have overshot our time. We were hoping to have some time for a Q&A session, but I think we'll have to skip that. But I think if you have any questions, you may please mark them to ASSOCHAM, and I think we would request the panelists to give replies. Okay, so thanks a lot, everyone, for attending this E-Conclave, and thanks a lot to the panelists for sharing their insights. I think this has been really great.
Thank you.
Thank you, Murni. Thank you all for joining us.
Thank you, everyone.